In the past, when you could get 6 or 7% interest on a CD and inflation was 2 or 3%, you were still ahead of the game. But now you get a 0.5% on your CD and inflation is 2, 3, 4, 5, whatever it actually is, you're losing. You can't win. And so as more people wake up to this reality, the demand for gold is just going to explode worldwide. And the price of gold is just going to go through the roof.
Hey guys, thanks for joining us. We have Peter Schiff, the CEO of Euro Pacific Capital and host of the Peter Schiff Show on the line. And Peter, I think we last spoke with you in November of 2013 and you were kind enough to give us an hour. We promise not to take that much of your time now, but thanks for joining us.
Sure. What's going on?
Let me ask you something. I learned something new, and it's this. Tell me if you guys knew this. David Cameron, the PM there in Great Britain, his great-great-great-grandfather, his fourth great-grandfather, was King William IV. And I found that pretty fascinating since David Cameron last Sunday on Sky News said that unless the powers that be are given new powers to seize bank accounts, taxes will have to rise. Unless they're given new powers to raid bank accounts, taxes will have to rise. What a crazy threat. And if that's not the idea of a bail-in, I don't know what is, Peter. Did you hear that news?
I wasn't particularly, paying attention to that, but I would have to agree with this idea, though, that bank deposits should be at risk. They're not supposed to be government guaranteed. If you put your money in a bank and the bank acts recklessly and loses your deposits, then the deposits need to be lost. I mean, today we have this idea that if you put money in a bank, the government will make sure that no matter what dumb thing the bank does with your money, that it can't be lost. And so either the taxpayers are going to have to suffer losses when the banks are bailed out, or the depositors will have to suffer the losses when their banks fail. And I would much rather see the losses be borne by those who made the decisions to deposit their money there than to socialize the losses among all taxpayers, even those that were smart enough to avoid the problem banks in the first place.
Yeah, that's the key, though, isn't it? People need to avoid these criminal banks, these problem banks. They need to not deposit their money in these banks that are at risk, right? But the problem is, Peter, most of the sheeple people, I guess, have no idea that the banks are at risk.
Well, that's because the government is guaranteeing all the bank accounts, so nobody cares. That is the moral hazard that is inherent in this system of government guarantees. If the government wants to say that you can put your money in any bank you want and you don't have to worry, then society has to worry because the banks will be reckless in that environment. In a free market environment where depositors are concerned about the safety of the banks where they entrust their deposits, you'll have competition for sound banking, competition for safety. And so you'll have an inherently more solid banking system. The one we have today is extremely risky thanks to the moral hazards introduced by government.
I wanted to ask you, Peter, about your thoughts. This latest news here that the London silver fix is dead. I've been interviewing some folks about this, and it's funny that even the most educated folks out there, a lot of people didn't even know there was a London silver fix. I guess it's been in place since around 1919, along with the gold fix. What do you make of this news that, for whatever reason, I guess it's because Deutsche Bank couldn't sell their seat on the gold fix, that the silver fix is now going away effective, I think, August 19th. Had you heard about the London silver fix?
Yeah,
what do you make of it?
I heard about it, and to be honest with you, I don't really know what the implications are. I mean, I've bought gold and silver, and we sell gold and silver, but we don't do it at the London fixes. We do it at whatever the market happens to be at the time the transactions were made. So I don't really, transact at those fixed prices, but I don't know how it's going to change the market.
Yeah, I've been hearing from others that, it may or may not change the market. They feel the same as you. People seem to not know how this will affect the market, but I think it does show a little bit of the desperation of the powers that be, that they did this in such a haphazard way. They did it so quickly and so publicly and so clumsily. Well, and the other thing is, I think it's interesting that Deutsche Bank couldn't sell their gold price fix seat because people are, I guess other banks are terrified of the potentially billions in liability that could come from having to possess that seat and be involved in the gold price fix. Maybe.
I don't know what the liability is. Does it come from lawsuits or is it from exposure to the metal? I don't really know where
Yeah,
the risk is, but
maybe it comes from potential lawsuits because of the massive manipulation and because there's so much paper gold in the market and the physical's all gone. I mean, I think by many accounts there's 100 times more paper gold in the system than there is physical gold. Maybe that's part of it. Maybe they're afraid of future lawsuits. I'm not sure. But one thing's for sure: Russia and China are now actively discussing the de-dollarization process, and I think that puts the Fed in a very difficult box to be in as the buyer of last resort of treasuries.
well, the Fed put itself in this box. It's the Fed that expanded its balance sheet to the degree that it did. And so now the Fed is in a situation where it can't raise interest rates without bankrupting itself, without bankrupting the U.S. government, without collapsing the stock market and the real estate market. But it can't continue to expand its balance sheet without destroying the dollar. So, the Fed ultimately has to pick its poison, but there is no easy way out of this. And, it's not the Russians' fault or the Chinese fault, it's our fault.
Yeah, no, you're right. It is our fault. And I've long been saying, Peter, that we need to remember who killed the dollar, because what will happen in the mainstream Mockingbird media is they will try to pin the death of the dollar, or the decline of the dollar, or the end of this system, which I think is coming and really cannot be stopped. It's a matter of when, not if. They're going to blame it on Putin and China and everybody but the people at the Federal Reserve. They're going to spin it, and they're going to put the pictures of Putin on TV and say this man killed your dollar, when I think really the opposite is true. It's the powers that be that are killing the dollar. I mean, I think Russia and China would have played along with this system for another 50 years, but we're surrounding Ukraine, NATO surrounding Russia, and we seem to be trying, to push a monetary World War III come hell or high water.
Well, I don't think they could stick with it for another 50 years because they'd have to lend us tens of trillions of dollars during that period of time.
Right.
And
Yeah.
the word lend, it really is not lend, it's give, because we can't pay any of it back. So I don't think that China and Russia would be willing to just hand over to America tens and trillions of dollars of their hard-earned money. So I think the system would have fallen apart long before a half a century.
Yeah.
But yeah, I mean, certainly to the extent that we threaten Russia, that might accelerate the whole process, which ironically in the long run is actually good for us. I think the sooner we can have the collapse that's coming, the sooner we can start repairing the damage and fixing what's wrong with the economy.
Well, what is wrong with the economy? What is your take on what's wrong with the economy? We keep hearing that unemployment has fallen to 6.3%. Meanwhile, 49 million people are on food stamps. Somehow those numbers do not add up to a thinking person. So,
Well, remember, in order to be counted as unemployed, you actually have to be looking for work.
right.
And so many people in our current economy are not looking for work. They're satisfied not to work. They're satisfied with living off of the taxpayer. And also, the way we count, if you have any kind of job, if you settle for a crappy job, a part-time job, or even a full-time, minimum wage type job, you're not unemployed anymore. And you'd like to have a better job, but you can't find one. And even if you're looking, even if you work part-time at McDonald's and then the rest of the day you're looking for a job, a better job, then you still count as being employed. Right. So I don't think the numbers really tell the story. The real story is the collapse in the labor force itself. The participation rate for men is at an all-time record low. And so just able-bodied people that should be working are not working. That is the real problem, because people aren't being productive, they're not paying taxes, and they need to be supported by everybody else who's still working. And when I'm talking about working, it's work in the private sector. If you're working for the government, and there are a lot of Americans who work for the government, that's the same thing as not working at all, basically, because government workers have to be supported by the private sector workers.
Right. Yeah, it's the very definition of a Ponzi scheme when it's those of us with jobs that are provided by private employers that are paying the salaries of these usually more highly compensated government workers. You're right. And I think right now there's this, statistics are showing that there are more government employees than there are private sector employees in the United States. So we've really hit the tipping point of being able to support this kind of Ponzi sort of communist system where there are so many government workers, it's unsustainable. Hey, our contributor Rory is on the line, and we had some trouble here getting this call working properly on the front end, so I didn't introduce Rory. So Rory, jump in here in a second if you have a question for Peter. Are you there?
I am here.
Okay, hang on. I want to ask Peter about the interest rates on the 10-year. It seems the Fed is needing to cap them at 3% and then on the low side at 2.6%, and they're really in a box. And Bernanke, according to Zero Hedge, has just recently said that there will be no normalization of interest rates in his lifetime, meaning the 10-year will never go above 4%. I think he's living in a dream world because the market, one way or the other, is going to break this 2.6 to 3-point range, don't you think?
Yeah, well, I think what Ben Bernanke is saying is that the Federal Reserve won't attempt to normalize interest rates in his lifetime, absent a financial crisis that he clearly doesn't see coming. Ben Bernanke must realize that given the leverage in the system, given how much debt that currently exists, that a 4% interest rate is impossible to finance. So therefore, he thinks the Fed will keep interest rates at the low level because that's all we can afford. But the market will not allow that to happen. Just because we can't afford to pay more doesn't mean the markets are going to allow us that luxury. Because, I think the main reason that the dollar hasn't collapsed and that the bond market hasn't collapsed is because there is a perception out there that these 0% interest rates are temporary, that it's only a stopgap measure to help us through this rough patch, and that the Fed is going to be able to normalize rates, that the Fed is going to shrink its balance sheet, raise interest rates back to normal. And it's the anticipation of the normalization that has supported the dollar. But if more people begin to have the same feeling as what you're saying Bernanke is expressing, that rates are never going to normalize, that the Fed is going to do QE forever, then the dollar will plunge because now there's no hope for it.
Yeah. Well, and the other thing keeping the dollar afloat has to be this buyer of last resort. We keep seeing this mysterious Belgium buyer of bonds show up in the market when there are no other buyers. I asked our pal Andy Hoffman about that, and he swears it has to be the Fed. He thinks it's the Fed. What's your take on that mysterious Belgian buyer?
Well, obviously, it's too convenient to be a coincidence that just as the Federal Reserve begins to taper, a mysterious buyer out of Belgium shows up and actually buys not only the amount of that the Fed is not buying, but the incremental buying coming out of Belgium is more than the amount the Fed is tapered by. And so now you have the European Union, thanks to Belgium, as the number 3 holder of U.S. Treasuries behind Japan and China. But to me, my guess would be it's not the Fed. I can't believe that the Federal Reserve would risk having a secret Belgian account, which obviously eventually it would come out that the account was controlled by the Fed, and the Fed would be exposed. Can you imagine, saying you're going to taper, but then secretly buying whatever you're, publicly not buying? I mean, that would put the Fed in. I don't think the Fed would risk that. My guess, if you ask me, I would say it's the European Central Bank, the ECB.
Sure.
Because the ECB, it's no secret that they're talking about how they want to keep the euro from rising. And they don't want to see the dollar plunge. And so maybe they are buying treasuries, instead of the Fed. In fact, maybe the Fed knew that the Europeans were going to pick up the slack, and that's what gave them the confidence to taper in the first place. Because had that European buyer not showed up, interest rates would have risen and we'd be back in recession. And so the only way to keep rates from going up was to find a buyer to replace the Fed, and maybe it's the ECB. But that's very interesting because a lot of people think the ECB is going to start a round of QE on its own. But if this is true, then the Europeans are already doing QE, except instead of buying European bonds, they're buying treasuries. So it'd be hard for them to do QE twice, once for themselves and once for us. But it seems to me that what we have to worry about is when the Belgian buyer decides to taper, because the Fed taper has been they passed the baton.
Yeah, it's a great point. It would be a PR disaster if people found out it was the Fed, so maybe it's the ECB. There's a lot of sense in that. But you know what? These people aren't exactly geniuses when it comes to public relations, the powers that be I'm speaking of, Peter, because we've got this most recent news that it's absolutely shocking to me that they could behave this way publicly, and apparently nobody has a problem with it in this country, because aside from Zero Hedge and those of us in the alt media, it's not being talked about. It's this fact that Biden's son, Hunter, is going to be on the board of directors of Ukraine's largest gas company. And it's so duplicitous and so insane that this is public news, but the Mockingbird mainstream media doesn't seem to care, and nobody's really reporting on it except those of us in the alt media. And it's just so overtly, is it fascist? I don't know, but it's insane that they would be, it's such a PR debacle for them, should people know and care about it.
Well, I mean, that's just the nature of the times that we're living in. It is amazing what goes on, and it's amazing how readily the public buys the propaganda that comes out of Washington or that's regurgitated through Wall Street. I mean, look at all the inflation news that came out this week on big increases in the CPI and the PPI and huge jump in the price of food. Almost all the reporting was how this is good news. Well, how this shows that the economy is strengthening, that demand is picking up. I mean, you got to be kidding. People, the price of food is surging. It's not like, Americans were going hungry. They weren't grocery shopping. And now that the economy is picking up, we're all going to the supermarket and all this demand is pushing up the price of food. We're not buying more food. The food is just more expensive because of inflation, and this is not good news.
No, it's terrible news. And in fact, they've been hiding inflation. We've talked about this before, Peter, in smaller boxes of cereal for the same price or slightly more money. They're trying to hide the inflation, but it's in the wide open now. I mean, what a staple chicken is. Is there really a better example of a staple food than chicken breast? It's up 12%, 12.3% in the last 12 months. That's 1% a month. I mean, that is massive inflation, especially if you're on a fixed income or you're one of these families making 50 grand a year for a family of four.
That's a lot less than the increase in the price of hamburger. Hamburger's gone up a lot more than that.
It's around 60%.
Well, it's just terrifying. And, California is literally on fire, and it's America's breadbasket. And it seems like this situation's going to go from bad to worse in a hurry.
Well, I think it's already worse, so it's going to go to something far more disastrous.
I want to throw this over to Rory. I'm going to ask one more question, then I'll shut up. So what we've been trying to do, Peter, and with gentlemen like you willing to come on and take your valuable time to help us spread the message and get the word out, we've been trying to help people learn how to protect themselves from the collapse of a fiat dollar. Silver in physical form, gold in physical form. I know you guys also sell precious metals. You've got a company you started a few years back. Silver capped at 20 and gold capped at 1,300 seems to be what the Federal Reserve and the bullion banks are trying to do. What's your take on silver and gold at these prices?
Well, I think the prices are good. I mean, I don't think the prices are capped here. I mean, maybe there is some selling here by people who believe the price is going down. One of the universal truths, it seems to be widely accepted on Wall Street, is that gold is going down and that silver is going down. And so I think you do have a lot of hedge fund and speculative money that is shorting the market. And these are the levels above 1,300, around 20 in silver, where the shorts come in. This is where they see the resistance, and so this is where the selling is. And at some point, the market's going to have to exhaust that selling. The buyers are going to have to be more motivated to take out these resistant levels. I mean, so far they haven't been able to do that, and so it just, I think, creates a longer term or a longer opportunity for people who need to buy. But I think that the overriding theme that has been emboldening the shorts is this idea that the U.S. economy is in fact recovering, and that the Fed is going to taper quantitative easing to zero, and then at some point thereafter begin to raise interest rates. This is what is providing the motivation to short gold and silver. But once it becomes apparent that the U.S. economy is not recovering, that the recovery, if it ever existed, is in jeopardy, and that the Fed is going to have to do more, not less QE, in order to try to stimulate a faltering economy, then that's a game changer. And I also think that it could be a wake-up call, because those people who, falsely believe that the Fed policy has worked and that that the U.S. is going to have strong growth and higher rates, they're going to realize that, wait a minute, the policy hasn't worked. If they've been doing it for over 5 years, the minute they just slightly reduce the amount of QE and we're right back to recession, it may finally dawn on people that the only way to keep the economy out of recession is to have QE forever, QE infinity. And then that isn't success. That is a complete failure. And that really will pull the plug on the dollar. And then you'd have a skyrocketing gold and silver price, a big drop in the dollar. And that's the thing that forces QE to an end, because eventually the Fed has to choose between propping up the phony economy and the U.S. dollar. And if they don't want to turn the dollar into monopoly money, if they don't want hyperinflation, then they're going to have to get religion pretty quickly. They're going to have to really jack up interest rates, not just a little bit, but a la Paul Volcker. And they're just going to have to brace for the impact, because it's going to hit the fan. We're going to have a much worse financial crisis than 2008, and no one's going to get a bailout, including the government.
I love that. Brace for impact. You've been standing by patiently, Rory. Why don't you jump in?
Well, that's a great segue, excuse me, Peter, to the questions that I have. And with this nightmare that's continually unfolding before us that you've just described, I mean, any change at all in the system and it just implodes. What is a simple, easy to understand way for people to begin protecting their families outside of gold and silver? Where would a person start? Would you suggest, stocking up on food to get ahead of inflation, or installing?
Well, I mean, that's an easy thing that people can do. I mean, to the extent that you have extra cash that you were going to put in the bank, I mean, why leave it there? I mean, it's just going to lose value. If you have extra room in your house, you might as well buy the things that you're going to need next year. Buy them now. They'll just be more expensive next year, maybe 10, 15, 20% more expensive. So that's not a bad rate of return.
And what would you suggest also, maybe if they have the means to install some sort of solar energy or something along those lines?
Yeah, I mean, look, if you can have a generator or solar panels, to the extent that energy becomes scarce. I mean, one of the things that will probably happen with a collapse in the value of the dollar is the ability to provide electricity will be diminished, because we won't be able to afford to import energy, and a lot of the energy we produce will be exported. And it's also possible that the government could actually impose price controls, which, as you know, is going to produce shortages. So if there simply isn't, power or electricity being provided, you might want to be able to provide it yourself. And, also you can buy seeds, you could try to grow fruit, vegetables, on your property if you live in the country or something like that. But people should be prepared. But if you have a lot of funds, if you have a lot of money, what do you do with your money? I mean, I think you got to get it out of U.S. assets. You certainly don't want to have bonds, treasury bonds, muni bonds, corporate bonds in dollars. We're helping our clients at Europe Pacific Capital build portfolios of good, high-quality, dividend-paying foreign assets. We find the countries that are not making as many mistakes as the major Western democracies are making. So, we invest in New Zealand, Australia, Singapore, Hong Kong, Norway, Sweden. There are various countries that you can be involved in where the central banks aren't acting quite as recklessly, but where the people are more productive, where they have trade surpluses, current account surpluses, countries whose currencies are likely to survive the demise of the dollar.
Yeah, you know what? We Americans are very myopic, aren't we, Peter? I mean, we tend to believe this propaganda we've been told since we were little kids that, America is the most powerful, the most honest, the most, free country on the face of the planet. Meanwhile, there's an entire world out there that is going to just bypass the dollar and keep moving ahead. In the few minutes we have left with you, Peter, I just wanted to ask you about the Shanghai Gold Exchange. When we talk about this London price fix, we talk about the Western central banks fixing the price of gold. Meanwhile, the Shanghai Gold Exchange and the Chinese and the Asian nations, they're moving ahead and they're going to sell gold without a price fix. Don't you think that at some point that becomes a reality that affects the real true world gold price even here in this country?
Well, there is a price of gold. No one has to set it. The market's going to determine the price of gold because there are people that want to buy gold. There are institutions and central banks that need to buy gold, so there's a market for it. I mean, gold has a pretty liquid market, and that's where it's going to be set. And, as more and more people around the world come to terms with the reality of the fiat system that we're in, especially when you have the world's major central banks deliberately and publicly pursuing policies of inflation, where you have central bankers saying that we need inflation, that inflation is desirable, and that if inflation isn't high enough, that the central bankers will act to make sure that inflation is higher than it is. And that is a 180-degree turn from the impression that central bankers used to strive to create, which was that they were for sound money, price stability, that they would fight inflation, that if inflation was high, they would strive to reduce it. But now they're striving to create it. They're like firemen, but their job isn't to extinguish fires, but to light them, right, to set them. And if that's the case, why would anybody want to hold on to dollars or euros or yen if the bankers are telling you that it's a no-win proposition for you? That if you hold this currency, we guarantee you that every year that you still hold it, it will be worth less than the year before. And we guarantee that the interest that you're able to earn will not be enough to compensate you for the amount of purchasing power that you are going to lose. Because we are telling you right now that that is our goal. We do not want our money to hold its value. We want to make sure that money loses value because we believe the only way you can have economic growth is if you destroy the value of your money. That's what we're saying. And governments are also saying that we have all this debt and we need inflation because it's the only way we can repay the debt. Well, technically, it's not repaying the debt when you inflate it away. It's defaulting on the debt. But so we're telling everybody that if you hold currency, you're holding the bag. You're going to lose. You're going to suffer. And as people realize this, there is only one alternative, and that is gold. In the past, when you could get 6 or 7% interest on a CD and inflation was 2 or 3%, you were still ahead of the game. But now you get 0.5% on your CD, and inflation is 2, 3, 4, 5, whatever it actually is. You're losing. You can't win. And so as more people wake up to this reality, the demand for gold is just going to explode worldwide, and the price of gold is just going to go through the roof. And the people who are shorting it now are going to suffer tremendous losses when the price breaks out.
We certainly do agree with that perspective. And I was just thinking as you were talking, Peter, you've got such a motor. I mean, the people that I respect the most in this world are the people that have motors, that are just busy all the time, entrepreneurs, people that give back to you. You give back. I think for me, this is a form of giving back to take time out of your precious schedule here to join us for a half an hour and talk to our listeners. We sure do appreciate it. But when I say you got a motor, I mean, you're an author. Your most recent book, The Real Crash, America's Coming Bankruptcy, How to Save Yourself and Your Country. You're the host of the Peter Schiff Show. You're the CEO of Euro Pacific Capital. And you also have your own precious metals company. Do you want to tell folks how to buy metals?
Yeah, well, schiffgold.com is the website for our precious metals company, schiffgold.com. And by the way, if you're still holding on to your Bitcoins, I think next week we're going to begin accepting Bitcoins as a form of payment for gold and silver.
That's cool.
So if you got those and you want to turn them into real money, and also, and make sure when you're buying gold and silver, you don't fall into the many landmines that are out there. There's a lot of scams. We've got a special report you can download at goldscams.com so you know what to be looking out for when you are looking for a precious metals dealer. But hopefully you'll just choose my company, and you'll definitely get a good deal. And, by the way, you mentioned my radio show. Listen to it at schiffradio.com. I do the show 2 hours every weekday from, 10 a.m. to noon Eastern time if you want to listen live. But if you go to schiffradio.com at any time during the day, you can hear the repeat of the most recent show.
All right. Well, you guys heard it. You heard it from Peter, right from the horse's mouth. They're going to accept Bitcoins in exchange for real money. That's I think that's sort of breaking news, Peter. That's pretty cool.
Yeah, well, there's a lot of people out there that still have Bitcoins, and I think they'd be smart to turn them into gold before the bubble totally bursts off Bitcoin.
All right. Well, you guys, thanks so much for joining us. And Peter, my biggest thanks to you to join me and Rory here and the listeners at SGT Report. Thank you so much for your time.
Okay, anytime. Thanks.
All right. Bye-bye. Guys, I just want to take a minute to thank you for joining us, and thanks for supporting all our efforts over at sgtreport.com and at thelibertymill.com. And you can even check out Rory's site, thedailycoin.org. I know he'd appreciate that. And as always, we appreciate you. I hope you have a great coming weekend, and we'll be in touch soon. Rory, thanks for your time.
Thank you very much.
All right, guys. Have a great one. Bye-bye.